Jeremy Tan, CEO of Tiger Fund Management. Jeremy, thanks for joining us again today. So was he kind of muted or negative moves in Asia Pacific? I suppose most of it's driven by what we saw from the Fed as we got the US figures, market moves as well. And so 25 basis points, they largely deliver on what markets thought. But the signal that there will be two more cuts for the rest of the year and then one cut next year. What does this signal to Asian investors watching the Fed?
Well, sure. Going into the Fed rate cuts this session, I think that there has already been a lot that's been priced in, and then this is really pretty much within expectation that there will be a 25 basis point cut and further two more cuts in 2025. But where that cut has actually missed is actually in 2026, where there was actually a downgrade to only one cut in 2026, as opposed to probably 2 to 3. So I think that there's a bit of overhang there in terms of 2026 rate cut momentum, and as a result, that has been really dragging down the Asian stocks that have been performing very well year to date.
Yeah. Do you expect Asia's export-driven economies to benefit from the Fed's stance? I mean, this year, two more cuts baked in right for now. I mean, yesterday's export data from Singapore and Japan showed continued effects of those tariffs. But with that one less cut next year, I mean, how do you expect all this to impact more export-driven economies in this region?
Well, I think that the overall tariff landscape, I think, has in terms of uncertainty that has already been passed. I think there is a lot of clarity in terms of the umbrella tariffs, in terms of the reciprocal tariffs within Asia. I think more so for export-dominated economies and also companies. I think there's a lot more clarity given that right now this rates has been fixed, and therefore I think that there has been some momentum that is lost in the second half due to the front loading of exports. But going forward into 2026, once the inventory cycle has been digested, I think the export momentum could start to pick up in 2026, especially for Asian economies that have tariff rates that are actually lower than expected.
How does the Fed's moves, what does it spell for USD Asia FX?
Well, I think that if you look at the overall FX within Asia, given that the Fed cut momentum right now is picking up pace, given that the Fed has actually been behind the cycle in terms of the rate cut, I think it's actually increasing that momentum of rate cuts into 2025, into 2026. And therefore, the interest rate, I think in terms of the differential against Asian peers will start to narrow. And as a result, you could see that perhaps there'll be more capital flow into Asia, especially into 2026.
So we've got Jerome Powell saying that this is a risk management cut and that, he suggests a meeting by meeting kind of approach as well going forward. Given this kind of tone, where do you see the greatest opportunities for Asian investors? US Treasuries? Are we talking about Asian equities? Where would, offer the best value?
Well, undoubtedly, I think that we have seen year to date due to what is happening within US in terms of the interest rate cut cycle and also the sovereign rating downgrades. There has been a shift in terms of de-dollarization, in terms of positioning away from dollar assets, and that means US Treasuries, that means US dollar, that is actually flowing into Asia. And as a result, there is actually continued momentum of that diversification into Asia. And therefore, we have seen year to date Asian economies, like for instance, China, Singapore, Japan, the indexes have actually sought to actually highs that we have seen in the near term. And I think that this momentum will continue to be in place given that valuation is still comparatively lower compared to their US peers. And there is really not a lot of actually upside that's being ascribed to some of these technology names within Asia.
Also, what was significant overnight was that the Fed managed to almost gather almost unanimous response to what they should do with the interest rate. There was only one dissenter who actually asked for a deeper rate cut. How much should Asia investors, how much weight should Asia investors give to political dynamics in the US?
Well, I think that the US continue to be a very important driver for the overall interest rate, I would say, rates in terms of globally. And I think that given that what we have seen in this round of rate cuts is that there is pretty much almost a near consensus in terms of where interest rate cycles will be for 2025, even though I would say that 2026 is still a bit too far out for the Fed governors to come into consensus. And therefore, I think that as of now, from between now to the end of 2025, there is really a lot of policy certainty as with the for the interest rate momentum. Yeah.
And finally, we've got the Bank of Japan expected to hold steady at its meeting. How do you see the Fed's decision influencing the BOJ's future rate path?
Well, I think there is a lot of impact for the Japan. I think that for Japan right now, they are really coming out of that lost decade, and really you can see that inflation is actually starting to pick up within Japan, while at the same time growth is continue to remain quite slow. So the Bank of Japan right now is really actually balancing right now on one hand, trying to really dial back on the easing cycle. Right now, in fact, they are actually trying to pivot towards a tightening cycle.
All right, Jeremy, appreciate your time and coming in today. Jeremy Tan, their CEO at Tiger Fund Management.